Hey, this is Jordan, and this video commentary is being recorded on the morning of January 15th, 2021. Thank you for joining me today. And in this quick video, I'm going to discuss a key support marker, a key moving average for both gold and GDX. Okay, so for gold, we have to look at the 300-day moving average. And here I have a weekly line chart, and I'm showing the equivalent to the 300-day, which is about the 62-week moving average. This is a weekly chart with an approximation, and just look at the arrows. Look at how many times this moving average has been a key support level during not only the bull market in the 2000s most recently, but also the 1970s. So this is a level that if the market goes through the 200-day moving average, which I believe gold has done, and gold is at 1831 as I'm recording this, stock charts, great charts, but they don't update intraday as far as gold, so that's why you see 1851. So anyway, 1831 is the current price. And also looking more recently, the COVID spike low came pretty close to the 300-day moving average. So you can see that blue arrow that's most recent. So this moving average support is now about 1744, 1745. So key level to focus on for gold. Now let's look at the gold stocks. And this is GDM, which is actually the parent index for GDX. So I like using this to get a look at history because GDX, the ETF, has not been around for too long. But anyway, the key level for GDX and GDM is the 400-day exponential moving average. So take a look at, and that's the blue line, and take a look at the blue arrows. You can see in the bull market in the 2000s, quite a few times, the 400-day exponential moving average was a great entry point. So it provided the lows during most of the corrections in the sector, most of the sustained corrections, you could say. And now gold stocks are down again today. They still have more downside to get to that level, which, as you can see in this chart, is about 7%. So in this chart at the top, we have gold with the 300-day moving average, which as of yesterday was at 1744. Maybe that's 1745 at the end of the day. But there's about 4% downside to the late November low, which was, I believe, in the 1760s, maybe 1760. And the downside from here, 1831, down to 1744, that's just below 5% to that moving average. So the moving average is coming up pretty close to the end of November low. It's within 1% now. So, and again, back to GDX, that has a little more than 7% downside to the 400-day exponential moving average, which is, I think, within, I want to say, about 2% of the late November low. So, yes, we've seen some sharp selling in the last 7 trading days or so in this sector, but it appears that we are coming down to potentially a significant low. So got to keep an eye on all of that. I'm also going to be looking at, in my subscriber update, and breadth. What are the breadth indicators doing? Because those can also help us gauge how oversold the market is and if it's really close to a sustained rebound. So I'm excited to see how those will look at the end of this week. But the main point here, keep an eye on these two support levels. For gold, that's the 300-day moving average. And for GDX and gold stocks, that's the 400 exponential day moving average. You can follow all my work at TheDailyGold.com. Thank you so much for tuning into this video. If you want some free information, check out the links in the description to the video. Make sure you're subscribed to my YouTube channel. Thank you so much, and I look forward to publishing another update for you guys in the days and weeks ahead.